Well, good late afternoon and evening from here on the West Coast in California, where it is currently 5:30 on August 3rd, Sunday, August 3rd, and we're back to trading for the week. Gonna run a chart here. The question asked this morning was about ServiceNow. Not a stock that I don't think I've ever been in it, but as with a lot of charts, I do note them. We talk about them in various live and recorded forums. And this one I do have some notes on, and I've updated it for the recent activity to see if there is a potential entry point sometime soon. And from the looks of it, I'm not so impressed. This is a year-to-date chart on ServiceNow. The stock is down 13.2% year-to-date with a wide open gap above at $1,135. That gap opened back in January as the market, the S&P 500, and the tech sector and the software sector recovered during the summer the last couple of months. ServiceNow has not participated. It did gap up twice in 2 days back in April. After it reached an initial peak in May, it has just been toppy ever since. Whereas we know the rest of the market, or large parts of the market, especially tech, have continued on to higher levels. And we'll look at those in just a moment. With regard to ServiceNow, we do have then that open gap at 833. A reasonable target from here at 914. Below that, we still have a gap at 776. And we have a trend line. And let's follow that thread and see where it goes. If we go back 3 years, it takes us to the bottom in 2022, October of 2022. And it has been a very well-defined trend line that's run its way through the movement of the stock over the last 3 years. That also is a reasonable place to pull back to, which is probably around 852 at this point, probably in the 860 to 850 area on that 3 year chart. But the stock has considerably underperformed as we've gotten into the summer months here. And so we look then to kind of give us some perspective on that. We go to the XLK technology sector, and you can see the obvious difference here. The XLK made its prior all-time high back here in February. Also made a high right around the same time that ServiceNow did with that janky earnings release in January. But the XLK did recover, did resume and make a new all-time high on June 24th, whereas we know and we saw that ServiceNow was not participating in that from this point on. So the XLK dropped gap down on Friday. We obviously know there are some levels there to which we could reach as well. This all-time high, prior all-time high, also represents a gap as well by 7 cents. There's a 7 cent difference between the dotted line you might just be able to see right there and the solid line, which is the prior all-time high. So if we compare that, we put ServiceNow and XLK on the same chart, we can see the considerable underperformance by now versus the sector. ServiceNow is a top 15 holding by weight in the XLK. It is in the top 15. We look at the software space, the software sector, of which ServiceNow is in the top 5 by weight of holdings in the IGV software sector ETF. The IGV made its prior all-time high in December of last year, did not break to a new all-time high until just on July 3rd, although with Friday's action, it did drop back below that prior all-time high. We compare ServiceNow to the software space, again, where it is a top 5 holding by weight in that ETF, we can see again the considerable underperformance by ServiceNow against its peer group of other software companies. So it does not inspire a lot of confidence in its ability to hold up, particularly if the market continues to decline, and if those high growth, high beta tech stocks see further declines, ServiceNow might very easily reach these levels we just showed. We take a couple of looks at some other stocks in the space just to kind of see what other stocks, both in the XLK and the IGV, are doing. Salesforce is down 24% year to date. Not very impressive there for one of your big, well talked about AI companies. Oracle is up 47% year to date, looking quite good. This is a comparison of Oracle against both the XLK and the IGV. And you can see they're up in the area of 8 to 10%, and yet we have Oracle up 47 with a target down here about 214 to fill that gap, down from a current 244. Adobe, very much an underperformer as well. Kind of have haves and have-nots here in this space. And Adobe is a have-not, down 21% year to date. Not so impressive with a wide open gap way up here at about 300, 435 on that open gap up there. Stock is currently 347. AppLovin, I don't chart this one too much. I just threw it up as a comparison. It is up 10%. It is also a heavy weight in the IGV sector. It's also part of the XLK, and it is up 10% year to date. And back to ServiceNow. If we go right to the XLK itself and look at the top stocks by weight in the in the XLK, yep. Microsoft up 25% year to date. NVIDIA up 25 as well, year to date. Apple, huge outside day there on Friday in Apple. It has been my opinion. I comment on this every day. I'm not favorable here on Apple. I did when it broke this line, thought maybe we could make a run and fill this gap up here at 221, but instead we topped out back on July 7th, and now it's running into some trouble. Broke this trend line dating back to the April low. Now it's testing a trend line here that stretches back to um, the high of 2024. Nope, that's the wrong one. It's this one right here. This one right here. Coming down through here. Anyway, breaking another notable trend line. We have a gap fill below. Anyway, look out below for Apple. I think we're going to continue to see some problematic trading there. Broadcom, if I had to buy a chip stock, this is the one I'd buy. Not convinced that the upside is all safe for now, but definitely would be the probably the safest shelter in any kind of declining market storm. Oracle, again, we've talked about that one. Salesforce, Accenture is down 26% year to date. Um, Adobe, again. Qualcomm, down 3.5% year to date. Qualcomm I've been kind of following this box for some time as it traded in this range for a considerable period before breaking down back into the area, now becomes resistance, and it's failed there again. Which I think a lot of this points to what we already know is that the percentage of stocks above their 200-day moving average at this point in the year is below by more than 10 points what it was at the all-time highs of late 24 and early 25. Fewer number of stocks making record highs, pushing that SPX up, while there are a lot of stocks that are not doing as well as they did prior to the April declines. Anyway, so the quick just kind of run through there on some other charts. Cisco up 13% year to date. That was AMD up 42. So just giving you a comparison of how ServiceNow has done compared to its peer group, and the short answer is it has not done well. And so we will avoid ServiceNow for the time being until we see some potential entry points at some more attractive lower levels. Thanks for hanging out. Hope you have a great trading week. Take care.